Hello students, welcome to the lecture on EXIM transaction procedures, and after this lecture we will be able to learn the following objectives. Understand the bill of lading, explain the export-import documentation and procedure, explain the procedure for export of goods, understand the categories of imported goods. Let's start with a brief introduction to the topic EXIM transaction procedures. A key success factor in starting any export company is clear understanding and detailed knowledge of products to be exported. In order to be successful in exporting, one must fully research its foreign market rather than try to tackle every market at once. The exporter should approach a market on a priority basis. A key success factor in starting any export company is clear understanding and detailed knowledge of products to be exported. In order to be successful in exporting, one must fully research its foreign market rather than try to tackle every market at once. Price is also an important factor. So before starting an export business, an exporter must consider the price offered to the buyers. Exporting a product is a profitable method that helps to expand the business and reduces the dependence in the local market. It also provides new ideas, management practices, marketing techniques, and ways of competing, which is not possible in the domestic market. Bill of lading. A document issued by a carrier or its agent to the shipper as a contract of carriage of goods. It is also a receipt for cargo accepted for transportation and must be presented for taking delivery at the destination. A bill of lading contains consignor's and consignee's name, names of the ports of departure and destination, name of the vessel, dates of departure and arrival, itemized list of goods being transported with number of packages and kind of packaging, marks and numbers on the packages, weight and or volume of the cargo, freight rate and amount. It serves as a proof of ownership, title of the cargo, and may be issued either in a negotiable or non-negotiable form. In negotiable form, it is commonly used in letter of credit transactions and may be bought, sold or traded or used as security for borrowing money. Types of bill of lading. There are several types of bills of lading, and these include the following. Shipped bill of lading. Under the Carriage of Goods by Sea Act 1924, the shipper can demand that the ship owner supplies bills of lading proving that the goods have been actually shipped. For this reason, most bill of lading forms are already printed as shipped bills and commence with the wording shipped in apparent good order and condition. This is the most satisfactory type of receipt, and the shipper prefers such a bill as there is no doubt about the goods being on board, and consequent dispute on this point will not arise with the bankers or consignee, thereby facilitating earliest financial settlement of the export sale. Received bill of lading. This arises where the word shipped does not appear on the bill of lading. It merely confirms that the goods have been handed over to the ship owner and are in his custody. Through bills of lading. In many cases, it is necessary to employ 2 or more carriers to get the goods to their final destination. The on-carriage may be either by a second vessel or by a different form of transport. Group age bill of lading. Forwarding agents are permitted to group together particular compatible consignments from individual consignors to various consignees situated usually in the same destination, country, area, and dispatch them as one consignment. Transshipment bill of lading. This type is issued usually by shipping companies when there is no direct service between two ports, but when the ship owner is prepared to transship the cargo at an intermediate port at his expense. Clean bills of lading. Each bill of lading states in apparent good order and condition, which of course refers to the cargo. If this statement is not modified by the ship owner, the bill of lading is regarded as clean or uncaused. Caused bills of lading. If the ship owner does not agree with any of the statements made in the bill of lading, he will add a clause to this effect, thereby causing the bill of lading to be termed as unclean, foul, or clause. Both FOB and CIF are two widely used types of contract of sale. FOB means that the price quoted by the vendor includes the price of the goods and all expenses up to and including the cost of loading the goods onto the vessel. Functions of the bill of lading. Provided satisfactory arrangements have been concluded, the shipper forwards the cargo. At this stage, it is important to note that the shipper always makes the offer by forwarding the consignment, whilst the ship owner either accepts or refuses it. The goods are signed for by the vessel's chief officer, and in some trades, this receipt is exchanged for the bill of lading. If the cargo is in good condition and everything is in order, no endorsement will be made on the document, and it can be termed a clean bill of lading. Bills of lading are made out in sets, and the number varies according to the trade. Generally, it is 3 or 4, one of which will probably be forwarded immediately and another by a later mail in case the first is lost or delayed. In the event of the bill of lading being lost or delayed in transit, the shipping company will allow delivery of the goods to the person claiming to be the consignee if he gives a letter of indemnity. This is normally countersigned by a bank and relieves the shipping company of any liability should another person eventually come along with the actual bill of lading. The delivery order is a document issued by the shipping company to the port of discharge. By handing this document over to the ship officer, the consignee can obtain the cargo. Export-import documents. It is very important to clearly understand the documents involved in the transaction to avoid the risk factors and adhere to the legal obligations. The entire documentation in export trade can be basically divided into two categories. Pre-shipment documents are those that an exporter has to generate, authenticate, and submit to the concerned authorities and departments to get the necessary clearances prior to the actual shipment of the cargo so that the cargo can be shipped out with valid documents. The pre-shipped documents are generally prepared when the product is ready for export and prior to shipment. The standard pre-shipment documents include customs invoice, packing list, GR form, original and duplicate, ARE1 form, original and duplicate, copy of export order, letter of credit, shipping bill, entire set, export license for notified items, certificate of origin, certificate of inspection, any other documents as required in LC or by customs. The post-shipment documents comprise the certified copies of some of the main pre-shipment documents and certain additional documents to be generated and compiled by the exporter so that the proof of shipments can be properly presented to the negotiating bank for collecting the payments through LC or for presentation to the foreign buyer for collection of payment through the nominated bank. The standard pre-shipment documents include custom attested invoice, custom attested packing list, copy of export order, copy of LC, commercial invoice, consular invoice if specified, bill of lading, airway bill, certificate of origin, certificate of inspection if specified, bill of exchange, draft, GR form duplicate, any other document specified in export order, LC. Customs formalities. Central Board of Excise and Customs (CBEC) is assigned a number of tasks, some of which are collection of custom duties on imports and exports as per Basic Custom Laws, Customs Act 1962 and Customs Tariff Act 1975. Enforcement of the various provisions of the Customs Act governing imports and exports of cargo, baggage, postal articles and arrival and departure of vessels, aircrafts, etc. Discharge of various agency functions and enforcing various prohibitions and restrictions on import and exports under the Customs Act and other allied enactments. Prevention of smuggling, including introduction of narcotics, drug trafficking and international passenger processing. CBEC mission is to achieve excellence in the formulation and implementation of customs and excise initiatives aimed at realizing the revenues in a fair, equitable and efficient manner, administering the government's economic, tariff and trade policies with a practical and pragmatic approach, facilitating trade and industry by streamlining and simplifying customs and excise processes and helping Indian business to enhance its competitiveness. 186. EXIM transactions procedures, creating a climate for voluntary compliance by providing guidance and building mutual trust. Combating revenue evasion, commercial frauds and social menace in an effective manner. Central Board of Excise and Customs (CBEC) is assigned a number of tasks, some of which are collection of custom duties on imports and exports as per Basic Custom Laws, Customs Act 1962 and Customs Tariff Act 1975. Enforcement of the various provisions of the Customs Act governing imports and export of cargo, baggage, postal articles and arrival and departure of vessels, aircrafts, etc. Discharge of various agency functions and enforcing various prohibitions and restrictions on imports and exports under the Customs Act and other allied enactments. Prevention of smuggling, including introduction of narcotics, drug trafficking and international passenger processing. CBEC mission is to achieve excellence in the formulation and implementation of customs and excise initiatives aimed at realizing the revenues in a fair, equitable and efficient manner, administering the government's economic, tariff and trade policies with a practical and pragmatic approach, facilitating trade and industry by streamlining and simplifying customs and excise processes and helping Indian business to enhance its competitiveness. Creating a climate for voluntary compliance by providing guidance and building mutual trust. Combating revenue evasion, commercial frauds and social menace in an effective manner. Procedure for export of goods. The exporters have to obtain PAN-based Business Identification Number (BIN) from the Directorate General of Foreign Trade prior to filing of shipping bill for clearance of export goods. Under the EDI system, PAN-based BIN is received by the customs system from the DGFT online. The exporters are also required to register authorized foreign exchange dealer code through which export proceeds are expected to be realized and open a current account in the designated bank for credit of any drawback incentive. Whenever a new airline, shipping line, steamer agent, port or airport comes into operation, they are required to be registered into the customs system. Whenever electronic processing of shipping bill etc. is held up on account of non-registration of these entities, the same is to be brought to the notice of Assistant Deputy Commissioner in charge of EDI system for registering the new entity in the system. Registration in the case of export under export promotion schemes. All the exporters intending to export under the export promotion scheme need to get their licenses, DEEC book etc. registered at the customs station. For such registration, original documents are required. Processing of shipping bill non-EDI. Under manual system, shipping bills, or as the cause may be, bills of export are required to be filed in format as prescribed in the Shipping Bill and Bill of Export Form Regulations 1991. Shipping bills are required to be filed along with all original documents such as invoice, AR4, packing list, etc. The assessing officer in the export department checks the value of the goods, classification under drawback schedule in case of drawback shipping bills, rate of duty, cess where applicable, exportability of goods under EXIM policy and other laws in force. Once the shipping bill is passed by the export department, the exporter or his agent presents the goods to the shed appraiser export in docks for examination. The shed appraiser may mark the document to a custom officer, usually an examiner, for examining the goods. In case the examining staff in the dock finds some discrepancy in the goods, they may mark the shipping bill back to export department DEEC group with their observations as well as sample of goods if needed. Processing of shipping bill EDI. Under EDI system, declarations in prescribed format are to be filed through the service centers of customs. A checklist is generated for verification of data by the exporter CHA. After verification, the data is submitted to the system by the service center operator and the system generates a shipping bill number which is endorsed on the printed checklist and returned to the exporter CHA. For export items which are subject to export cess, the TR6 challans for cess is printed and given by the service center to the exporter CHA immediately after submission of shipping bill. The cess can be paid on the strength of the challan at the designated bank. No copy of shipping bill is made available to exporter CHA at this stage. Octroi procedure, quota allocation and other certification for export goods. The quota allocation label is required to be pasted on the export invoice. The allocation number of AEPC is to be entered in the system at the time of shipping bill entry. The quota certification of export invoice needs to be submitted to customs along with other original documents at the time of examination of the export cargo. Since the shipping bill is generated only after the let export order is given by customs, the exporter may make use of export invoice or such other document as required by the octroi authorities for the purpose of octroi exemption. Arrival of goods at docks. The goods brought for the purpose of examination and subsequent let export is allowed entry to the dock on the strength of the checklist and other declarations filed by the exporter in the service center. The port authorities have to endorse the quantity of goods actually received on the reverse of the checklist. System appraisal of shipping bills. In many cases, the shipping bill is processed by the system on the basis of declarations made by the exporters without any human intervention. In other cases, where the shipping bill is processed on screen by the customs officer, he may call for the samples if required for confirming the declared value or for checking classification under the drawback schedule. Status of shipping bill. The exporter CHA can check up with the query counter at the service center whether the shipping bill submitted by them in the system has been cleared or not before the goods are brought into the docks for examination and export. In case any query is raised, the same is required to be replied through the service center, or in case of CHAs having EDI connectivity through their respective terminals. Customs examination of export cargo. After the receipt of the goods in the dock, the exporter CHA may contact the customs officer designated for the purpose, present the checklist with the endorsement of Port Authority and other declarations as aforesaid, along with all original documents such as invoice and packing list, AR4, etc. Variation between the declaration and physical examination. The checklist and the declaration, along with all original documents, are retained by the appraiser concerned. In case of any variation between the declaration in the shipping bill and physical documents examination report, the appraiser may mark the electronic shipping bill to the Assistant Commissioner, Deputy Commissioner of Customs, Exports. Stuffing, loading of goods in containers. The exporter or his agent should hand over the exporter copy of the shipping bill duly signed by the appraiser permitting let export to the steamer agent, who may then approach the proper officer, preventive officer, for allowing the shipment. Drawal of samples. Where the appraiser dock export orders for samples to be drawn and tested, the customs officer may proceed to draw 2 samples from the consignment and enter the particulars thereof along with details of the testing agency in the ICES e-system. There is no separate register for recording dates of samples drawn. The disposal of the 3 copies of the leased memo is as follows. Original, to be sent along with the sample to the test agency. Duplicate, customs copy to be retained with the second sample. Triplicate, exporter's copy. Amendments. Any correction, amendments in the checklist generated after filing of declaration can be made at the service center, provided the documents have not yet been submitted in the system and the shipping bill number has not been generated. Where corrections are required to be made after the generation of the shipping bill number or after the goods have been brought into the export dock, amendments is carried out in the following manner. If the goods have not yet been allowed, let export amendments may be permitted by the Assistant Commissioner Exports. Where the let export order has already been given, amendments may be permitted only by the Additional Joint Commissioner, Custom House in charge of Exports section. In both the cases, after the permission for amendments has been granted, the Assistant Commissioner, Deputy Commissioner Export may approve the amendments on the system on behalf of the Additional Joint Commissioner. Export of goods under claim for drawback. After actual export of the goods, the drawback claim is processed through EDI system by the officers of drawback branch on first come first served basis. There is no need for filing separate drawback claims. The status of the shipping bills and sanction of DBK claim can be ascertained from the query counter set up at the service center. Generation of shipping bills. After the let export order is given on the system by the appraiser, The shipping bill is generated by the system in two copies, that is, one customs copy, one exporter's copy. EP copy is generated after submission of EGM. After obtaining the printout, the appraiser obtains the signatures of the custom officer on the examination report and the representative of the CHA on both copies of the shipping bill and examination report. Export General Manifest. All the shipping lines agents need to furnish the Export General Manifests shipping bill-wise to the customs electronically within 7 days from the date of sailing of the vessel. Apart from lodging the EGM electronically, the shipping lines need to continue to file manual EGMs along with the exporter copy of the shipping bills as per the present practice in the export department. Categories of imported goods. All types of imported goods come under the following 4 categories. Freely importable items. Most capital goods fall into this category. Any product declared as freely importable item does not require import licenses. Licensed imports. There are a number of goods which can only be imported under an import license. This category includes several broad product groups that are classified as consumer goods, precious and semi-precious stones, products related to safety and security, seeds, plants and animals, some insecticides, pharmaceuticals and chemicals, some electronically items, several items reserved for production by the small-scale sector, and 17 miscellaneous or special category items. Canalized items. There are certain canalized items that can only be imported in India through specified channels or government agencies. These include petroleum products to be imported only by the Indian Oil Corporation, nitrogenous phosphate, potassic and complex chemical fertilizers by the Minerals and Metals Trading Corporation. Prohibited items. Only 4 items, tallow, fat, animal rennet, wild animals and unprocessed ivory, are completely banned from importation. Imported and export goods. White Finance Act 2011, self-assessment has been introduced under the Customs Act 1962. Section 17 of the Customs Act 1962 provides for self-assessment of duty on imported and export goods by the importer or exporter himself by filing a bill of entry or shipping bill, as the case may be, in the electronic form, new section 46 or 50. Section 46 of the Customs Act 1962 makes it mandatory for the importer to make entry for the imported goods by presenting a bill of entry electronically to the proper officer, except for the cases where it is not feasible to make such entry electronically. Similarly, on export side also, Section 50 of the Customs Act 1962 makes it obligatory for exporters to make entry of export goods by presenting a shipping bill electronically to the proper officer, except for the cases where it is not found feasible to make such entry electronically. In cases where there is no interdiction, there will be no cause for the declaration filed by the importer to be taken up for verification, and such bills of entry will be straightaway facilitated for clearance without assessment and examination on payment of duty, if any. Summary. Now in the end, let us summarize what we have learnt in this lecture. The bill has therefore not the same meaning as a shipped bill, and the buyer under a CIF contract need not accept such a bill for ultimate financial settlement through the bank unless provision has been made in the contract. The exporters have to obtain PAN-based business identification number (BIN) from the Directorate General of Foreign Trade prior to filing of shipping bill for clearance of export goods. Discharge of various agency functions and enforcing various prohibitions and restrictions on imports and exports under the Customs Act and other allied enactments. The shed appraiser may mark the document to a custom officer, usually an examiner, for examining the goods. All the exporters intending to export under the Export Promotion Scheme need to get their licenses, DEEC book, etc. registered at the customs station. For such registration, original documents are required.